With my tech background and having a college degree in computer science, I realized that almost.
Okay. Do you have a long-term price target for Nvidia, or would you rather keep that to yourself?
I believe it will be over $1 a stock within 2030.
There's always a chance, but you're saying there's a very little. Is that your kind of?
Yeah, the US will never go into recession. That's it. That's my.
Hello, fellow investors, and welcome back to Borex Investing. So today's episode is a special one for me. I'll be interviewing my good friend Basil, and he's someone who's been one of the biggest influences on my own investing journey. So we've known each other for nearly 2 decades. And,
Yeah.
back in the day, we'd spend hours hanging out talking about, the market, stocks, life, and pretty much everything in between. So Basil was actually the one who first pushed me to buy Apple back in 2010, and more recently, Nvidia in 2022. So his track record really speaks for itself. He had returns of about 135% in 2023, 49% in 2024, and he's about 80% year to date in 2025.
Yep.
So, he's an expert in this field. So, these days we live on opposite sides of the world, but we still talk often about markets, big tech, and investing strategy. So today I get to bring one of those conversations to the channel. So we'll cover Basil's thoughts on the big tech landscape, Nvidia, where he thinks the market is headed with AI, and how he's protecting his wealth going forward. So trust me, this is going to be a conversation you won't want to miss. Thanks, Basil. Thanks for doing this.
I appreciate it, man. Thanks for having me, Borik.
Yeah.
So going back two decades, huh?
Yeah, it's been too long. It's been too long. No,
Yes.
no, it's like you always say. You become an average of the five people you surround yourself with, and I was lucky enough to spend a lot of time with you growing up. So that's why we're obsessed with this stuff, and that's why we're doing well. All right,
Uh,
so hey, let's start off with some big tech questions. So you've been bullish on big tech pretty much before anybody else I can remember. So I remember listening to you compared to seasoned investors like around 2010. And, the seasoned investors were always telling me, like, hey, invest in ExxonMobil, Walmart, Berkshire. However, you were really big back then on Apple, Google, and even QQQ. So this was really before the market even coined the term Mag 7. So, 15 years later, you were correct. So, for instance, Exxon has approximately doubled since 2010, whereas Apple since 2010 has 25x, and QQQ has gone up 12x in that same period. So, what made you so bullish back then, and are you still as bullish going forward on big tech?
um, well, I start by saying thanks, Borik. Thanks for having me,
Yeah,
man.
no problem.
It's been a long decade, 2 decades, I guess, right?
Yep.
Anyways, uh, I've made a lot of mistakes investing initially.
Mhm.
I was starting from 2006 till maybe 2010, 11. I would say gambling, like trying to
Mhm.
buy something low and sell high, et cetera, et cetera. In the meantime, I was just watching my 401k like going up each year, and I'm like, what's the difference? Why is my 401k going up and the common things I'm trading isn't working? I took a pause and I started listening to a few good old investors, and I came across a person that I think he's a great mentor for me,
Mhm.
Charlie Munger.
Of course.
And the reason I liked him, he basically said, don't look at the price, just look where the company could be in the future. You could overpay a little bit now, but if you know that the growth is going to be high in the future, your returns will be great. With my tech background and having a college degree in computer science, I realized that almost everybody in the future is going to be using some kind of technology, uh, whether it's sending an email or making a phone call or reading a text. But then when you realize what this processes or what this technology could do, you realize it's like the Coca-Cola of 1950. where when Coca-Cola came in, it was like a penny to the dollar stocks then. And now it's like in the 90s, $90.
Yeah.
So you look at it and say, well, you have a product that you know it's going to grow, not just 300 million people in the United States, but roughly the 2, 3, 4 billion people around the world who actually have internet access.
So for
Where
instance, you looked at the iPhone and like when you saw the iPhone come out in like 29 or 2009, 2010, the first like usable one I think was like the 3S or the 4. Like you pretty much looked at that and you saw, hey, this is going to change everything, so I'm investing in Apple. When people buy their next computer, because of the UX UI of the iPhone, they're going to start buying Macs and then they're going to be in the ecosystem and they're going to keep buying more and more Apple products. So that
yes,
really totally happened. So my kind of question is, do you think that has peaked? Because you were bullish on the you were bullish in the past on Apple, but going forward, like, do you think it's going to have a similar growth rate that it had in the past?
yes, I'm very bullish. And I think it's going to be a larger growth because that growth came largely based on hardware. And that like people start buying iPhones, Mac, the whole ecosystem, Apple Watch, accessories, the whole thing. But now they have a huge base, which then it allows them to use different new area of growth that they haven't started to tap in yet, which is services.
Yeah.
And that's huge. So now they already have the base to
Mhm.
actually grow, which is going to allow them to have a different multiples than a hardware company or a normal a soft, like it's going to have a huge multiple comparing to where it is right now. I don't believe investors or I don't want to say investors. I believe investors know that the stock is going to go up. But what I believe within the next 10 years, it's not going to just go up. It's going to be a container to all the technologies that's going to be built on top. You want to build a new app, a new idea, okay, it's using Apple. But Apple then isn't going to be just a hardware device. It's going to enable a lot of guardrails against AI, a lot of processes that Apple will be actually kind of like the governor over your technology. You want to
And
be trusting them.
and this is because just everybody has iPhones, or because this is the most used product, this is the accepted kind of technology that we've pretty much I don't know what their current market share is of iPhone users, but I assume it's huge because everybody I know uses iPhone. So,
Two
and
billion.
I'm in Europe, so Apple wasn't as popular here
Yes.
years
Two.
ago, and now everybody has iPhones. So,
Yes. 2 billion devices. So currently they have 2 billion devices. So they have 2 billion opportunities in a daily basis that one of their devices is going to be touched. When that happened, the growth now is not going to be based on them selling those 200 billion, 2 billion devices. It's going to be based on the services that the consumers are going to be using through Apple. That's what I believe the next growth is. But
okay.
right now, I look at Meta.
Hmm.
Um, they have 3 billion, 4 billion users.
Yes.
They're already grown. That's it. So investors used to pay for them to grow, to reach to that level. So they already reached there. Now they're trying to use AI to expand their multiples to actually grow more. So it's not to grow their base, it's to actually grow what the users are doing in their
Hmm.
platform. And
Yeah.
that's what the opportunities I believe is. So I believe now the whole world rely on those 5, 6 big companies. I would say Microsoft, Apple, Meta, Google. Think about it. If you want to build any business, you're going to have to use one of those four.
Hmm.
If you want to build anything as a like small business, you're always going to rely on one of those three paths, four,
Yeah. I
five.
mean,
That's
I'm
it.
I'm shocked how many people now use Google Sheets, like as
Exactly.
opposed to Microsoft. So it's
Yes. And those 4 or 5 platforms already built their base. They already have the, like I'm originally from Palestine and I
Mhm.
was born in Jordan. So I flew there often, and people use Google all the time. People use Microsoft all the time.
Yeah.
So they already have their base. They're on Instagram, they're on WhatsApp, they're using it. They already built their base. They already got their multiple for that. Apple got their multiples.
Mm-hmm.
They got paid. It's already a $3-4 trillion company because they already got their base. Now their next level of growth is the next generation of technology, and this is
Okay.
what I believe.
So this is like the next wave of the tech
Yes,
revolution. Okay.
yes,
So one thing you mentioned to me in the past is that when you invest in a company like Google or you invest in Apple, you're kind of like investing in 10 companies in one. Can you kind of explain that? Because
yeah,
to me it makes sense, but the way you so eloquently put it in the past, I was like, wow, he's really, this is totally right about, Google
yeah.
not just being a search engine anymore, or Amazon not being just a, can
Yeah.
you kind of give a little.
So I'll give you a quick example. Ring,
Yeah.
the company Ring,
Hmm.
successful, became multi-$100 million company, small business company. They
Yeah.
were successful. They got that multiple of 200-300 million dollar company valuation because they were able to use Amazon Web Services,
Hmm.
and because they're able now to stream. The customers now are able to see what's happening in their homes outside while they're in Poland, while
Hmm.
they're in Europe. I see who's on my door.
Yeah.
That is what they're paying for. That wouldn't have been able to happen. No way. Impossible without Amazon.
Yeah, of course.
So now so now Amazon is not just a delivery company.
Hmm.
That's one of their businesses. Like a Walmart, virtually, it's a
Yeah.
Walmart, right? But then on top of it, they have Amazon Web Services, which is just by itself, it's a totally new business,
Yeah.
which is a different segment that now every single business is going to either use Amazon Web
Yeah.
Services.
Yeah, exactly. So it's funny because when you kind of talk to people, most people think that Amazon grew so much in the last 10 years because of Amazon Prime, because people use it, in the retail front. But really when they had that high PE ratio of like 5 or 600 back, 10, I forget when it was, about 10 years ago, it was like kind of like Palantir's PE ratio right now. Really what set them on the path was AWS, because so many enterprise companies were actually buying this service, and just the
Yes,
scalability was so high that it became, Amazon became like a behemoth because of that.
yes,
So yeah, and Amazon also, they own like Whole Foods, so they're it's like 20 businesses in one, right?
yes, yes. And
And
now they're trying to get into healthcare. So for
yeah, I mean
example,
that's
so it's the full, like it's like 5-6 businesses in one, but all of it, if you Netflix,
yeah,
a great company, right?
yeah,
It
hmm,
sits on AWS.
hmm,
So Netflix wouldn't be as great of their services, and right, they have great APIs, they have great like technology, their platform is amazing. You watch it, it's pure, it's beautiful, right?
hmm,
It wouldn't have been able to be as good without Amazon,
yeah,
because they're using their web services. So it's kind of like, okay, you're building this man, like Netflix is almost $1 trillion company now, $1 trillion valuation, and it's because they're streaming and how good they're streaming,
hmm.
right? And that wouldn't been able to happen if they're not using AWS.
Yeah, for sure, for sure. I mean, all of this stuff, we just kind of all take it for granted because we turn on the TV or
Yeah,
whatever, we stream on our phone and we forget what's actually on the back end doing all the work. And a lot of
yeah,
times it's kind of technology that not, a lot of people pay attention to, like AWS. When people think of Amazon, they think of Amazon Prime, but AWS is really the driver there. So, we're talking about, I think this is a good segue into Nvidia because you've really been huge on Nvidia for years. But I want to talk about customer concentration with Nvidia, because obviously
mm,
everybody knows that Nvidia is great, but Nvidia just revealed on their latest earnings report that 44% of their data center chip sales were just to customers. So they didn't reveal which customers it was, whether it was Google, Amazon, or Meta, or whatever, but it was obvious that it was customers that have really high capex capabilities, that can really spend money on these expensive chips. So when it comes to demand, right now, NVIDIA is benefiting from really extraordinary spending on these chips. But what happens if that demand slows down? Like, let's say investors start questioning whether customers like, let's say, Amazon can keep pouring so much money into GPUs. How will Nvidia adapt to that? I mean, do you think they're going to pivot towards new markets or regions, maybe Chinese customers to sustain growth? Like, what's your thought on that thesis of that, like Nvidia demand and how it's going to look going forward? Because right now it's super concentrated towards like a very few select big tech companies.
All right. So in 2010, I believe, or no, 2015 or 16, Nvidia took a huge hit.
Mhm.
And the reason for that, they kind of switch how they're thinking about their chips. They wanted to build a full stack one where their customers, they're not just buying it and goodbye. No, now they're buying it and they're become a subscriber of their chips, their full stack. So now, even if the downturn comes, they're still going to always get their multiples. So that took almost 10 years to build. There is no competitors in the lands in this land in this field that they could catch where they are right now and how advanced their chips are. And they're becoming a monster in their field that the next player or the next company behind, by the time they get to where Nvidia is, we would have been 10 years ahead of what Nvidia has delivered to us. B2B right now is their
Mhm.
main benefit, the main benefits that we see from Nvidia.
Yeah.
Right now, you would see a lot of things that used to require manual process in the financial industry, loans, origination, consumer,
Mhm.
plus at a massive scale, not at a one-to-one, me and you, a small bank giving you a loan. No, banks with banks, how they consolidate their loans, how they value all this being done in the back end using AI. How is that all being done? All is being done using AI, using NVIDIA's chips. Nothing even comes near to what they have delivered so far.
So, but
There is like
before,
216 data centers in the whole world.
yeah.
That is going to become maybe 2,000, 3,000, 5,000 in 5 years.
But
And
what
that's
if, but
all going to be
what
built
if
on
like a
top.
Chinese competitor comes up, and what if Huawei is able to, or Xiaomi is able to create, replicate this?
Yeah,
No,
it
no,
wouldn't be the same performance.
it
And
wouldn't.
that's where NVIDIA excel. For we always say, all right, well, I don't need it to be as fast, but it matters to me when it's a business to business, and
Mhm.
that's what matters. But for consumer, it's fine. And this goes back to the whole cycle of those 4 or 5 companies. We have Microsoft, Apple, Amazon, and Meta. If right now you tell me Nvidia, if Meta goes down, literally shut down, like there's something and they went down, a lot of businesses will get hurt.
Mhm.
Period. Like they're just gonna get hurt. It's gonna hurt their bottom line until Meta comes up. Why? Because they use them for advertisement, they use them for XYZ. Meta is using Nvidia's chips. So now that concentration, while it's true, but it's because now everything is relying on one stack, and that stack is Nvidia. Now, if you say Huawei, if they can reach to where Nvidia is right now, by the time they get there, that technology is already like 10 years ahead, like 15 years ahead, 20 years ahead. They're catching up to a wheel that it's moving at a 10x that's the speed that used to be in the past.
Yeah. Okay. So, what do you see as threats then to invade? I mean, is the only short-term threat that China invades Taiwan, or do you see just like you mentioned? I mean, it's not funny, but so
Yeah.
that's clearly something everyone always talks about, the potential of war in Taiwan and that just really being a disaster for the whole semiconductor. But other than the kind of cyclical you were saying is how Nvidia is going to just kind of go with the market, you don't really see any other major threats short term because you don't think that China is capable of replicating these type of chips.
No. Short
Okay.
term, no. Long term, hell no.
Okay.
And short term, it when I say short term, like in a year or two, which for a lot of people is a long time, but for in a year or
Yeah.
two, they could stay in this valuation for a while because the China market is not 100% open to them yet. So they're not even like open 100% with the latest chips to China. So if that market were to open to them, their valuation is gonna like cut like is soar. Right
Mhm.
now, they're bringing $200 billion a year without China.
Yeah.
Imagine if there is a place where, and here's the thing about technology. Right now, we're trying to say, okay, well, it's national security or it's more, we want to control where AI goes. But the thing about technology is you can't control it. It's not like it's not monopoly.
Yeah.
Somebody will always try to come up with something. So Nvidia, for it's better for Nvidia to be open to everybody to utilize because now they become reliant on Nvidia. But from somebody catching up to Nvidia, no, I don't believe it's Nvidia excelled, which take me 10 years back from when Nvidia changed their vision of how they want to build their chips. They don't want to just build it to, okay, I'm a consumer, I'm buying your chips and I'm done. No, now you're actually a customer of them where you're going to have subscription with Nvidia. So that's a totally different valuation where they are. And if they build it in a stack, no company is even near where Nvidia is.
Okay. Do you have a long-term price target for Nvidia, or would you rather keep that to yourself?
I believe it will be over $1,000 a stock within 2030.
By 2030. So within 5 years, it's going to grow to $1,000. Okay, interesting.
Yes. So their valuation should be in around 16 to 18 trillion dollars by then.
All right, next topic. So let's move on to AI since we're talking about NVIDIA. So I just want to tell the viewers a story. So I remember years ago, you were kind of showing me the chart for Domino's Pizza. And I don't really remember the details, but I remember that the stock like popped incredibly and it had like a huge run up from like 2010 to whether it was like 2016, 2018. And you were like explaining to me that the reason for this pop is because they really transformed from a pizza seller to a kind of a pizza tech platform where you could order pizza off an app. And, this was like cutting edge at the time. This was like before Uber Eats, right?
Yep.
And you kind of predicted the rest of the market would follow suit as they became smarter with the help of technology. So now I'm obviously drawing parallels of that conversation to the landscape we have today with AI. And so, Basil, in your opinion, who is going to benefit next in the AI revolution?
I mean, outside of Nvidia,
Yeah, of
obviously.
course. Yeah.
So
And
right,
Palantir. And Palantir. I'm
yes,
a Palantir bull. So,
yes. Utilities.
mhm.
That's because they're going to reinvest and try to modernize their way of delivering utilities.
So mostly electricity when you're
Yes,
saying it,
yes,
right?
yes. Because consumption is going to increase, and how they deliver that power is going to change, and
Yeah.
it's usually good for the underlying securities. Um, Fast forward to, I would say, 2, 3 years from now, I believe a lot of retail will benefit, and largely large retail like Walmart will be a huge beneficiary. I also believe a company like Waste Management, believe it
Hmm.
or not, like Waste Management, just by improving your driver's routes or how you process your transactions, financials.
Hmm.
SoFi, I mean, SoFi is right now literally competing with major banks that are with loans. They wouldn't even be able to come near that level if it wasn't for technology. And now it's not just technology, it's the way they understand their customer, the way they could profile their customer, the way they could know how much loan they could give him, approach him. They understand him better. All this, it's allowing them to compete with large banks to have a better value, like better.
Yeah. I mean, I we both worked in banking for a bit, and we totally understand that the biggest cost for banks are employees, and there's no other way around it. So if AI kind of makes some of the costs decrease for whatever reason, I think financials definitely will kind of catch on the next wave of the AI revolution. However, my question is whether these banks, like these legacy banks, like a JP Morgan, like a Citi, are really going to be able to offer the same type of products, for instance, that Sophie or that Robinhood are offering, because they're more at the forefront when it comes to the tech front. Because I use Fidelity, right? But I remember like using Robinhood in the past, and I was way more impressed with Robinhood.
That is very true. Like right now, which is great, because now it's allowing them to have a great product using a less overhead.
Yeah.
So you just mentioned like Robinhood now is competing with Fidelity, Morgan Stanley E-Trade, JP Morgan, Citibank, and not just trading, no, wealth transfer.
Yeah.
In the sense of, okay, we could now host you, we could become your custodial for your 401k, not just at a retail level, but also at a business level, small businesses, et cetera, et cetera. So now there, and all that is allowed truly because of technology. That wouldn't have been able to if it wasn't technology. So it's transformational. It's transforming everything. And we see in our eyes right now, business to business, B2B right now is totally has shifted. And they're seeing some of that fruits out of AI. So far, I'm not an owner, so full disclosure here, but I truly believe it's one of those companies that could become a fintech that could overtake a lot of. I don't want to say overtake, but it could take a lot of
Steal market share. Steal market share.
Yes.
Yeah.
Yes.
So we talked about financials. What about insurance companies? Because I heard this, I was watching some Palantir presentation where someone from an insurance company was saying that the underwriting process used to take weeks, and now they're able to do that in like minutes.
Yes.
And but what about ethics here? Because if you're an insurance company, what is to stop you, like from, let's say, if you're the Hartford, or if you're, what's the other major, like Geico or whatever, like what's to stop you from just getting rid of all the people that do the underwriting and let AI do it?
Um,
Is there anything stopping them, or is it just the kind of
no,
blowback that?
no. Like right now, it's not comparable, but if you go to a lot of gas stations here, you would see a lot of self checkout.
Mhm.
I mean, why? In the past, it used to be like, wait, my margin is going to decrease because I'm going to have more thefts or going to like have more kiosk. No, like right now, they're saying, wait, if I have a kiosk at a checkout, a grocery store, a gas station, now I'm actually saving on labor.
Mhm.
Now that is being transformed at insurance. Um, they may, I don't want to get into the ethics behind here, but if they solve for the easy cases or the common cases, the cases that it's, I would say 70% of their claims or process,
Mhm.
if that could become automated, think
Yeah,
of the
like the
overhead.
low hanging fruit. Instead of having
Exactly.
people do that, have
Yes.
the
Yeah, so
AI.
now you reduce your force, and the force that remains tackle the more, I don't want to say complex, but the more that it has like questions on complexity or ethics
Yeah.
or needs human, but the ones that doesn't, all these will be eliminated. And here's the thing, Warwick, the companies who does not and stick and still remain in that model, 10 years from now, they're going to hurt their bottom line. And a
Mhm.
new company like SoFi is going to come and take their market share.
Yeah. Yeah.
So they may stay around, it's going to stay around, et cetera. But in the long term, 5, 10, 20 years from now, that is gone. That is gone.
Interesting.
I think about it right now. I'm an immigrant. You're an immigrant. A lot of immigration laws. It's very unique. But if you notice, a lot of people who apply for their citizenship, it's a common application. If there is some process that could just tell you, hey, here is boom, enter your information, and all this done behind the scene, you know how many fees would be like it would be saved from. That's the whole industry, not industry, but that's a whole revolution is happening. That's just a small example. Real estate, filling the mortgage, filling all this stuff. All this is being automated for. It's not just being automated. Vetted profile against you. They already know what you could afford. They already know that this is the loan you could get. This is everything is already set up. It's connected to the level that I don't want to say it's scary. It's in a way not letting you do a lot of tasks. So all those low hanging fruit tasks are gone.
Yeah, I mean, it's a very ethical question when you come up to it because you look at something like Twitter, right? When Elon Musk bought Twitter, I mean, he fired what, like 80, 90% of the workforce, and it still was functioning. And, you
Yes.
know, I'm not saying it was better or worse after he purchased it. I don't want to get political here, but, it was still working. And I kind of feel like during the pandemic, we witnessed that a lot of people weren't really doing as much work as they say they were doing. And yet everything was kept going as it is.
Yes.
So it's
Yes.
almost like, the highest we're talking about right now, we were talking about banks earlier, that the biggest cost for banks are employees. But if banks could really deliver an even better service with less employees, it's almost like it benefits society. Yeah, those people lose their jobs, but if they're able to get a better service in the end, maybe it's going to just force them to do something that's better for, get
Yes.
into a different field. So anyways, that's like a whole different topic. So let's kind of go back to the market, because the more we get about AI, automation and robots and, replacing everyone, that's
Yeah, yeah, yeah.
we could start talking about the Terminator or whatever.
No, but
Terminator,
in
Skynet.
reality, though,
Yeah.
there's a lot of things that's happening now.
Yeah.
Like now, as we speak right now, a lot of companies are utilizing AI to reduce a lot of their overhead, and you can
Mhm.
see it in their margins,
Yeah.
and it's reflecting their stock price. And that is happening truly because of the whole AI revolution.
Mhm.
So we could be stubborn. We could be like, no, it's not. It is going to change how companies do business, and the companies that does not,
Yeah.
they're going to be left behind.
They're
That
not
is,
going to stick
they're
around.
gonna they're gonna not
For
they
sure.
won't be around.
Yeah. So with that in mind, kind of where do you see the market headed in the next 2, 3 years? I mean, saying some world disaster doesn't happen, like a World War III, like a Taiwan or another Ukraine event, do you still think that we're really on a good path to be bullish for the next 2, 3 years?
Yes,
Okay.
in short term, like I don't know right now because
Yeah,
right now
obviously.
it's what we're in September now, so it's
Yeah,
usually
worst month on record, right? Historically. So we'll see.
yes. But I know I believe I don't want to like overshoot, but 25% to a 30% um, within next year and the year after. So I believe
So you think we're going to go up 30% the next 2 years on the S&P, on the Nasdaq? Does it
S&P.
just on the S&P?
I'm
Okay.
always in the Nasdaq, but
Yeah.
almost everybody is invested in this S&P. So I would say 25 to 30%.
Over 2 years. So about 15 and 10, like something like that, like
No,
over.
no, to 20% to 25% next year and 25% the year after. So I'm thinking 40% in the next 2 years.
Interesting. Wow. I mean,
Yes,
I
yes,
wouldn't complain if that happened, but I mean,
yes.
we'll
I
see.
really believe that we will be in a different market. Like it will have a different valuation come 2 years from now. I believe we will be, if we look back right now, it would be maybe 40% gain.
And you think this is really driven by like AI efficiency, like these
Yes,
companies adopting, lowering their
yes,
costs,
yes,
better
100%.
margins?
Yes,
100%.
yes,
That's
yes.
interesting. So,
You 100% could see it right now in financials. 100%, you could see their margins is improving tremendously.
okay. So obviously, yourself and me, we've done very well in the last decade or so, and we kind of have to start looking at the market differently, right? Before when we were younger, we were all like, oh, how do we make the most amount of money as fast as possible? And, we've both done fairly well. So are you now looking to invest in anything specific to kind of just protect your wealth? Or are you just still long QQQ, long NASDAQ, long these companies? And
Yeah, right now my weighting is I'm always vested.
Mhm.
So I'm always vested, and currently I'm always vested almost always in the Qs or Nvidia. I'm focused just Nvidia for now. But I've been gradually increasing my gold exposure. I own around 10 to 15% of my portfolio is in GLD.
Mhm.
And that is not for geopolitics, none of that. No, I just believe the value, the currency is then with inflation and where we're hitting. I believe GLD is a great hedge in case the markets were to take a dip instead of having cash on the side. I believe GLD
Yeah,
then would
it's
be good,
That's
and I could.
great. That's a very good strategy. That's a very good strategy to have GLD inside because, if we do have a recession or something happens, some global catastrophe, gold always goes up when something like that occurs. So
Yes.
yeah. What about like Bitcoin? Because they say Bitcoin is the digital gold. I know we laughed at it in the past, but like it is becoming serious. And more and more institutional investors, more and more like, companies are holding it on their balance sheet. You have national governments purchasing it, like Germany did a big sale or did big purchase and then followed by a big sale. Trump signed some Bitcoin act, right? Cryptocurrency act. So you don't,
I'll be honest
how
with
do,
you.
yeah, be honest.
I own 100 shares of Ether and 100 shares of eBay, and nothing because I want to own them. I own them because I want to track them. Like I want
Okay.
to have them where while I'm looking at my portfolio, I could just look at the prices. But personally, and that's my personal opinion,
Of course.
I don't see a use case currently where crypto could serve. I could be wrong, and I'm looking forward to see where it's going to go. But I mean, I don't have I, what I don't have any expertise in, or I don't have much knowledge. I try to just
Yeah.
keep my opinion to myself. But personally, I'm not invested. Like that's almost nothing in my portfolio. So I don't have
It's
anything in crypto.
it's so weird because a lot of people,
Yeah.
for the last 5 years have been saying that, oh, instead of buying gold, just buy Bitcoin. It's the new digital gold. And really, it's not because if you really track when the NASDAQ goes up, the NASDAQ goes up, Bitcoin goes up.
Yes.
And when the NASDAQ goes down, Bitcoin goes down and GLD goes up. So this whole
It's
idea that it's a like I understand that some people think that Bitcoin is a hedge against inflation, like a hedge against currency debasement, because different governments around the world just are spending money, printing money, they have growing debt. So I understand that, but in my opinion, like Bitcoin is almost just the same as big tech in that sense, where big tech is also kind of a hedge against inflation because you know as things get more expensive, people pay more for services, their revenues go up, it's just something that occurs. But really gold is something else. And gold is something I think that is very worthwhile investing. So you're saying that you own how much now? 20% of your portfolio?
around
Is it
15%. Around 15%
15%?
of my portfolio is gold.
15%
Yes.
isn't,
Yes.
I mean, I think that's a very good strategy. I mean, holding that will probably, if we do take a crazy downturn or whatever, that'll probably keep your portfolio
In check.
not looking awful. Let's just say
Yes.
that it won't
Yes.
look too bad. So
Yes.
okay,
But it's furthermore, it also kind of like, I mean, I don't like to have cash on the side. I
Yeah,
think cash on the side is just not like there's no use.
especially with inflation like we have, right?
Yes,
Yeah.
yes. So my play is always okay. Well, if something happened geopolitics, gold is gonna go up, so that's cash available for you to invest right away. Um, uh, it's if you look historically, gold and the S&P 500, they're almost identical.
Yeah, they actually are.
Right.
Yeah.
The only thing is S&P gives you dividends, so
Hmm.
that's more income to you. But outside of that, performance-wise, no. But if you pick your spots, is good. I don't try to play the spots game.
Hmm.
Just have this much in my portfolio, and if it goes my way, awesome. If not, it's just gonna stay there, and hopefully my portfolio will outgrow where it's not as 10-15% right now in my portfolio.
So, okay, good to know. You've told me in the past that really the Fed is responsible for kind of like the global direction of the economy. So, we're going to kind of have a Fed that's going to lower rates probably in the next discussion, next
Yep.
years. If Trump has his way, rates are going to go down to, probably
Yep.
zero. So you're really not looking at the market right now and saying there's a chance of a recession, right? There's no chance with this kind of Fed coming up. There's very little. Sorry, there's always a chance, but you're saying there's a very little.
Yeah, the US will never go into recession. That's it. That's my. I'm no way. The Fed is always going to step in.
Yeah,
They're always going to ease when there's a need. So there's no way the US will go into recession. The Feds will always. Markets is not economy. So recession is not the
of
market.
course.
Right.
Yes, that's very true.
Yeah. So if the Feds start coming in and say, okay, well, here is you could now invest and you could borrow money for lower, you're basically reviving the market. You're putting gas on fire.
Yeah.
You're just lighting
Now,
it up.
listen, I'm not one of those people that's like concerned about recessions. It's just something that drives market sentiment. I mean, I personally think that the whole idea of a recession is really, it's kind of stupid if you think about it. Because you look at somebody like, you look at a country like Japan. Japan has had like no economic growth for the last like 10 years because they also don't have a lot of people. So, with
True.
less people, it's harder to grow your GDP. So, I
One
mean,
thing as well, Borex, which is different than previous recessions time. 2018, if we had a recession,
yeah.
like hypothetically, if we had a recession in 2018 or 2016, the Fed didn't have the tools to do.
Hmm.
They couldn't lower rates. They were at zero. They can't, like, they're going to go negative.
Yeah,
They're
yeah.
going to pay me to borrow from you then.
Hmm.
So they were at zero. Now they have the luxury. So even if we go into a slowdown in growth, they
They
have
just lower
that.
rates. Yeah, of course.
Exactly.
Yeah,
So they have that buffer. They didn't have that buffer before COVID. From
exactly. Yeah.
2008 till 2020, we were almost at zero borrowing money until COVID came, and we're still borrowing at zero, still borrowing at zero. But then now he's been raising interest because of inflation for the past 2 years, 2 or 3 years, whatever, since
Uh-huh.
2020. He's been raising interest. Now he has that buffer. So if the economy goes slow, he has a lot of buffer to actually lower interest, which is gonna light the economy on fire.
Yeah. All right. So here's a bonus question that is is interesting because you're definitely a capitalist, and I don't want to get too political. I don't want you to reveal your thoughts on President Trump. Let's stay apolitical here. But what are your thoughts on the move that they made to purchase a stake in Intel? Because I have thoughts about that I just think that's
Yeah.
go first.
I mean, like, no,
That's terrible, right?
that's
Why would you do
I,
that?
I'm in a game where I'm like, if a company isn't like, I'm all I'm always in the market, so I'm taking that risk, right? If I do a stupid move tomorrow and I go to zero from whatever whatever, if I go zero, do I expect the government to come and bail me? No.
Yeah.
Do I expect if tomorrow SoFi start issuing massive amount of loans and not being complicit? I mean, why should the government? And this is the thing with Intel
They
right
keep
now.
doing it, right? They keep, and
Y-
it doesn't matter if it's Republican or
Yes,
Democrat. Like I
yeah,
think it was the Republicans that bailed out GM and Ford
yeah,
in like
yes.
2007,
Literally failed, literally built,
and
literally.
then the banks were bailed out. I think by Obama, right? Like a few
Yeah,
years later, more packages, insurance companies, AIG. It's just all weird to me. Like it doesn't
yes,
matter who's. And this latest iteration of like having the government purchase a stake in a chip I mean, right now there's a boom on chips, and like Intel missed it, right?
yes,
Like, does this? I mean, this doesn't mean that they can't really like turn the ship around, maybe with the help of, I don't want to say the help of the government, but maybe with some support from the government, and then kind of steer towards the right direction. But I just think it sends the wrong message. And
yes.
I think it goes actually against a lot of what
That capitalism.
yeah, well, a lot of what capitalism, and Trump is supposed to be a capitalist, and we believe in capitalism, but this is just a very weird move. So
Yeah.
it's kind
No,
of hard for me
I
to
don't want to
understand.
get politics here, but no, in a perfect world, um, Intel will fade away. Intel will
Yeah,
be right, and rightfully so. There will be an opportunities for new
of
companies to
course. I
take
mean,
over, and that's the thing behind technology now. And this is why I always believe technology is always gonna make things better because it's making things cheaper for people to start their own businesses, to start their
mhm.
own ventures, which right now, okay, until okay, you could pour all this $1 billion, billions of billions to try to revive it. Believe me, 10 years from now, if they don't change how they do their business, how they actually change their model, their business model, that money is a waste. They're going to fail.
Yeah, and personally, like going back to the automotive industry, look in Europe, BMW, Mercedes, like Porsche, they're doing awful, and like Tesla's eating them up for lunch. Like 20 years ago, if you told somebody that an
Yeah.
American car would be the
Yes.
number one selling, vehicle in Europe, people would say, no, no
Yeah.
freaking
Who
way.
are you?
And like Tesla, a company that wasn't even around, 20 years ago, is now the number one selling car, but it's because it's like those car companies were failing, so somebody new stepped in and was able to,
Yeah.
innovate and create something better. And now it's capitalism, and that's what you want in capitalism. You always want, you know, better things coming up, and like we see with capitalism, like how expensive televisions were they when they first came out, and like now televisions are
Yes.
dirt cheap. You go through a certain cycle, product life cycle, and
I
just
think I think Ford. I'm not sure if it was Ford. He said if I wanted to listen to the people, I would have gave them faster horses,
yeah, exactly
right?
right. Henry
So
Ford.
like then it was like, oh, everything horses, or like no car. And this goes to the point where I mean of capitalism. If that money was given in 2008 instead of GM and Chrysler and Ford, and you really give it to businesses. I'm not saying all of them are going to succeed, but look at Tesla. Within 20 years, they became like they overtook GM and Ford.
Yeah.
If there was another opportunities given, you would have made it totally like Ford would have been gone right now. I know, iconic company, iconic United
Mhm.
States company, et cetera, et cetera. But Ford has been like static for the past 20 years, not doing anything, nothing, zero. Just there those trucks and that's it. Um, you would have given a totally new opportunities and new venture, new companies to actually come up with a better model, which will revive everything. And this is the advantage that I believe tech could always bring to the table is making it cheaper, it's making it easier for new smaller businesses to excel and advance and be able to compete against those larger companies.
Yeah, thank you. All right, Basil, that's all I had scheduled for today's questions. I mean, we were talking for about an hour, so I think,
Thank you, sir.
again, thank you. I appreciate you taking the time. I always appreciate when you kind of also, one of the reason I appreciate our relationship is because you always kind of question my conviction on certain investments that I make, and I think it makes me do my due diligence and analysis. So if there's anyone out there that disagrees with whatever Basil said, go and research it. Go and look at the stuff and, form your own conviction. So again, you're bullish on tech. I love it personally. You're still bullish on Nvidia. You threw out some very high price targets for the future. I hope that they become true because then we'll probably be, hanging out in Saint Tropez or something.
Definitely.
But again, thank you, Basil, and I'll talk to you soon. Appreciate it.
Yes, sir. Good talk.